Take a look at shares of Polaris in the meantime, though, surging post-earnings after a beat on both the top and the bottom lines. Polaris CEO Scott Wine joins us this morning exclusively. Scott, it's great to have you. Thanks for your time today.
Good morning, Carl. Glad to be here.
It seems like quarter after quarter, if the questions aren't about tariffs and sourcing, it's now about the coronavirus and sourcing. Can you tell viewers essentially what you said on the call?
Yeah, you know, we felt really good about our fourth quarter and the way the year played out for us, and we're feeling very optimistic as we head into 2020, both with our products, our leadership team, and obviously the curveball thrown with the coronavirus. You know, we do source some from China, and you know, luckily parts are still flowing. We've restricted travel, but we don't expect a significant impact of our business. There was an extension of the Chinese New Year, which we have to play with a little bit, but we feel really good about the ability of our suppliers there to continue to be able to provide the parts that we need to build our vehicles and to satisfy our customers.
What's the most important dynamic that would now affect the current quarter? Is it the duration of travel restrictions in China, something else?
No, really, it's simply if something happens that disrupts the supply chain. We believe that our suppliers there, we've been dealing with them for a long time, and they've already taken steps to make sure that they can mitigate any problems. And really, they're not restricting travel within cities. And, you know, we even have some parts coming from Wuhan, and they're continuing to flow smoothly. So we're encouraged by what we've seen so far.
What are you seeing when it comes to demand, Scott, in this economy? I mean, as well as things are going for a certain segment of the economy, and probably the one most likely to be buying equipment from you, I would think you look out into the year and that drives your expectation for sales growth. Is it really about the broader economy and how well the middle class, upper middle class is doing?
Well, certainly, you know, many of our workers work in that industrial environment, and so we need consumer sentiment to stay strong, and so far it has. We do anticipate that the economy is going to remain in that 2 to 3% range, which is good enough for us. And right now, credit remains very available. We've got great new products, and that tends to drive demand. And so far, traffic within our dealerships has been good, and we're reasonably optimistic for the year, targeting sales of up 2 to 4% and earnings up, 8 to 12. So not a bad outlook for 2020 for us.
North American retail up 2, whereas Harley, which also reports today, has North America retail down 3. I know some of the categories might not be an exact match, but are we seeing a bit of a share shift in that area, at least when it comes to some discretionary dollars?
You know, we've done a really nice job over the last 5 or 6 years with the Indian brand to gain market share, and we regained. We'd been on a little bit of a share decline in the first part of the year, but we returned to share gains in the fourth quarter with Indian, and we launched the new Challenger fixed fairing bike with the liquid-cooled engine. Great technology. We launched the new Slingshot in Vegas last week. So we feel really good about new product introductions in our Indian brand and what we can do with that business and Slingshot throughout the year, and we expect another good year of market share gains and growth in motorcycles.
Finally, on the health of the consumer, are you seeing any trend toward more financing of product or less, or more consumers coming in and willing to plop down some cash?
You know, we still get about 2/3 of our buyer that use some form of credit, and, you know, we work with third parties to provide that. Credit's very available. As you know, interest rates remain low, and ultimately that aids our buyers, and, you know, we expect, you know, that to continue to be a tailwind for us as we go throughout the year. Really, it's about brand and product and technology and providing that customer engagement, and the team's done a really nice job as we exited the year and going into 2020 with an exceptional game plan that we feel comfortable we can execute.
Scott, shares responding to all of that today. Thanks for coming on, talking a bit about it. Good to see you again.
All right, thanks, Carl.